Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within financial filings. And today we're diving into Campbell Fund Trust's SEC report. Let's just say this filing is less about a dramatic financial roller coaster and more about a quiet behind the scenes maneuver that could have its own ripple effects. We're looking at a Form 8K, which is like a current report, meaning it's filed to announce major events that shareholders should know about right away. The key date here is August 31, 2025, which tells us when the main event happened that they're reporting. The company we're talking about today is Campbell Fund Trust. They're incorporated in Delaware and their main office is in Baltimore, Maryland. Scroll Securities and Exchange, Kemiston. Now, what's the big news? It seems Campbell Fund Trust decided to issue some new ownership stakes, or what they call units of beneficial interest. This section item 3.02 tells us about these equity securities sold in transactions that weren't officially registered with the Securities and Exchange Commission. You know how sometimes companies go through a big public sale of their stock? Well, this wasn't like that. Think of this as them selling pieces of the company. The total money they got from selling these new stakes, not counting any money held in escrow, was quite significant. Specifically, they raised $2,879,120 and $820. $82.35 for Series D and $495,000 for Series W. That's a lot of cash flowing in. Why weren't these registered with the SEC? They're relying on something called Section 4.2 of the Securities Act. Basically, this means they didn't do a broad public offering. Instead, they sold these privately following specific rules called Regulation D. This usually means they offered these stakes to a select group of investors, often those considered financially sophisticated rather than the general public. It's a way for companies to raise capital quickly from a known base of investors. The filing itself is then signed off by Thomas P. Lloyd, who is listed as General Counsel and Chief Compliance Officer. This report was signed on September 3, 2025, a few days after the sale of these units. Looking at this filing, Campbell Fund Trust is making a strategic move to bring in more capital. By using Regulation D, they're essentially sidestepping the lengthy and costly process of a public registration. This suggests they likely targeted specific investors who are already familiar with the fund, or who fit a particular profile that meets the exemptions. What this means for the company is a more direct injection of funds and potentially closer relationships with these new investors. However, it also means these new shares aren't as widely disseminated as they would be in a public offering. The total amount raised, close to $4.5 million, is a good chunk of change that can be used for various purposes, whether it's expanding operations, new investments, or simply bolstering their financial reserves. From a Warren Buffett perspective, we'd want to know who these investors are and what their expectations are. Raising money privately can be very efficient, but it also concentrates ownership and influence. The specific series designations A, D, and W usually indicate different classes of shares with potentially different rights or preferences. Without more detail on the terms of these units, it's hard to say exactly what this means for existing holders, but any new issuance dilutes existing ownership. Overall, Campbell Fund Trust seems to be navigating its growth trajectory by securing private funding. The key takeaway is their focus on privately placed securities rather than a public market offering. This filing itself is quite straightforward. The main story is in the details of how and why they chose to raise this capital. It signals a deliberate strategy to manage their fundraising privately. Alright, that's our look at the Campbell Fund Trust filing. What are your thoughts on this private placement of securities? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe to Corporate Decoder for more insights. And don't forget to join our Discord community for deeper dives and discussions. The link is in the description. Thanks for watching and we'll see you in the next one.